right, let's turn now to the debate over Fed independence and how incoming President Donald Trump may try to influence Fed policy in his second term. Former Kansas City Fed President Tom Hoenig joins us right now. He recently wrote about this topic in an op-ed in the Wall Street Journal. He's currently a distinguished fellow, a senior fellow, I should say, at George Mason University's Mercatus Center. And Tom, let's talk about this. You laid out in your op-ed that you don't think that Donald Trump is going to try and fire Jay Powell or end his term early. What do you think?
Well, I think the situation is such that Jay Powell and the Federal Market Committee is in an easing mode right now. And so why, with all the other things he has on his plate, why would you fool with that as long as they're not raising rates? I would first, and I would point out to you, Becky, that presidents getting involved in monetary policy is not new. As I pointed out in my remarks or in my op-ed, that starting with, well, at least from Harry Truman, Johnson, Nixon, all had a lot of influence on the Fed's chairman and on the FOMC, and especially in a time when they wanted interest rates not to be increased. That's not going to change with Trump at all. And the other thing to remember is you have really a committee that has full discretion over monetary policy. So one of the most important things to our economic system, money and interest rates, are controlled at the discretion of a policy body. That means it is going to be subject to political pressure regardless of who is president. So that'll be the case with Trump. And should they find themselves in a situation where they need to raise interest rates, Trump will put a lot of pressure on them not to do so, given his other plans going forward. He doesn't want to see the economy slow because of higher interest rates. So I don't think it's going to happen. And if it does, if he starts putting pressure on, Powell has May of 2026, he'll be gone, and he'll be looking to who he puts in Trump's place will be his priority at that point, I suspect.
Trump has said that he doesn't really like high rates, is not going to want high interest rates, but he also wants a stock market that gives him a really good grade about how his administration is doing. That's important to him. Those seem like conflicting potential ideas if you get into a situation where the deficit is rising, some of these issues come down. If you were a betting man, how would you bet which one of these priorities is going to rise to the top if it turns out that they are in direct conflict?
Well, I suspect that the lower interest rates will, because it's been the experience for the last 20 years. The low interest rates move asset values up. We see it right now. We see it in the stock market. It's much higher than anyone would have suspected. And so that's kind of what you look for with low interest rate. Now, having said that, if we do get a situation where with government spending the way it is, the deficit growing like crazy, and the Fed is pressured to keep rates low and pressured to print money or buy that bond, then inflation takes off, and you will get a lot of upward pressure on interest rates regardless. However, that's probably more than 6 months, probably more than a year away, and that still is enough time for Powell to work his way through this and Trump again to see who's going to replace Powell in 2026.
So I think you're not super concerned at this point.
Pardon?
You're not super concerned at this point. There are things you're watching, but you're not super concerned at this point.
I'm not super concerned about the pressures on the Fed because they're already in that mold. But a year from now, I'm going to be a lot more concerned, because then I think we're going to have deficit problems, potentially inflation problems if that gets monetized. So that's when you begin to worry about the relationship between the Fed and the president.
And the questions that will be asked of people potentially stepping in to take over the Federal Reserve at that point.
That's going to start even later.